Hello traders, Gary Wagner here, approximately 11 a.m. in Honolulu, 5 o'clock in New York, the last day of April 30th, 2012, and this is the daily report for gold and silver. Mixed bag today with gold being up and silver being down. Current print, we are up about $2.30 in gold, 1665.10, 66.10 bid-ask spread. The low is 49 and the high is 76. Silver, though, can't seem to get out of its own way. Currently trading down anywhere between 20 and 24 cents lower. The low is 30.61 and high 32.35. Interesting scenarios that are brewing over in the European Union. Continued concern in Spain. They've got an unemployment rate of about 25%, and with that and austerity measures that currently exist, the fear is that they can't really kickstart their economy. That has brought some concern to the market itself. We're going to go ahead and take a look at our 770 minute. This is, of course, in Henkin format, and as you can see, we don't have the strength of the trend that we saw last week when we look at the body size of these candles. However, we had a doji just prior to this, but what we are looking at right now, of course, is a solid green Henkin candle, as you can see right in here, lack of a lower tail, and that is showing us at least that this trend, this uptrend, does have a little bit of steam in it, a little bit of upside momentum. Traders, we are looking at June gold off of the COMEX. This is a weekly chart. It is in Henkin format. We'll look at it both ways in Henkin as well as candlestick. And one thing that becomes pretty evident, of course, in terms of our count itself, hit the top of our market up in here. This is 1920 on the June contract. It came out to about 1938. That was the top in the June contract. We have our first wave here, 1, 2, 3. It is my belief that we're currently in 4. That should take us to the top of this channel. One final fifth wave, and then our thrust line up above it. That at least is what I'm looking at right now. All indications are that we are working within this triangle correction. We have had no data that has really altered that or invalidated that. Now, how would that become invalid? Well, if we break through these sets of lows here, it's certainly going to become invalid. But for right now, at least, it absolutely appears as though this triangle correction is still in play. Recommendation, maintain the long position that you have. Traders that don't have positions in gold, I do believe that it is time to begin to scale in, put half a position on in terms of the quantity that you're looking at. So if you're looking at 200 ounces total, you'll put 100 ounces. If you're looking at 20 ounces total, you'll put 10 on. But I do believe that all traders should be positioned on the long side in gold. Now, traders, the same cannot be said for silver right now. I'm going to blow up this silver chart here. And as you can see, Henkin format also, we have had lows that have come down and tested this area. This area has held. My sentiment is, as you know, I was looking at the possibility of issuing a buy trigger. We did not this weekend, and the reason being is it hasn't shown any strength. We have good support in this area, but I'll tell you, this is what does have me worried. When we take a look at these highs here, here's 37, we make a new low here. We make a lower high, lower low, lower high, lower low. It begins to consolidate. So here we make a equal high and a higher low, equal high. So we have a triple top right in here. And at that point, we actually do make a lower low. The market comes back up and it consolidates for a while. It attempts to break out, cannot, moves back down. And as you can see, you had this slow, methodical move up. And here it comes down and it tests these low areas, manages to close well above it. But once again, this market is under pressure. What does that tell me? Well, we're probably going to retest this 30.52 area. We have tested it, of course, earlier today. We talked about what the low was, But my sentiment is right now that we're going to stand on the sidelines in this market. If it breaks through this area, it's a whole new ballgame, player. So we're going to have to take a look at how it reacts specifically within this area. And for the last chart, this is the same market that we looked at, June gold, and this is in straight candlestick format. And as you can see, we had this engulfing bullish on a weekly chart. And right now, of course, this week has just started, but if this candle goes solid green and begins to move up, that's going to give us an engulfing bullish confirmation on a weekly chart. Last time we had that, that was right here. This is engulfing bullish, and you get your confirmation. You get a green candle, higher high, higher low. Although it's not a very, very strong candle, nonetheless, you do get that. You have a very similar scenario down here where you had an engulfing scenario. Even here you have an engulfing scenario. So the engulfing bullish is a fairly common reversal pattern that we do see in gold as it pivots off of the lows and moves back up. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.
Pick up every stitch.